That also means that they'll now struggle to their initial promise of growing at a run rate which could be higher than the industry average. I remember along with the Q4 numbers, we started celebrating, we started thumping the table with the assumption that Infosys is coming off a turf, and they rebooted themselves at a run rate which could be higher than the industry average. But if the Q1 growth is so poor, I doubt that they could do anything special for rest of the year.
I completely agree, because I think that's a much larger question, because whatever has happened in last 4 to 6 quarters, there was an expectation that was building that Infosys is finally back on track, and after long spell of consistent underperformance, it would come back to at least an industry leading or at least a bellwether kind of a status in the industry with revenue growth. But this result would make a lot of people more circumspect and cautious, including us, that whether it's really possible and whether it would really happen. So I think that's a much larger question, and very correctly pointed out by you that the entire assumption of 4 to 6 quarters that industry average growth rate would be delivered by Infosys is under a question mark, and unless there is a credible explanation by the management for this kind of number and this kind of performance, I don't think investors are going to like it very much.
Liking it already, Pankaj. Let's just go across to Trip Chaudhary once again. And Trip, disappointing numbers, both in terms of the dollar revenue as well as the rupee revenue. It seems like they're not quite going to match up with the FY17 guidance. And our fear is that they're not even going to be able to keep up with the industry average.
I think, first of all, a few things here. The industry average means nothing, because that's also wrong. I think if you think about the IT services industry, like I've been talking since the last many quarters, there is no fundamental strength in the business because of technology shifts that are happening. There is a management uncertainty with Indian IT services companies. The industry is moving so fast, and Indian IT services, including Infosys, Wipro, TCS, are too lazy to reinvent themselves. And last quarter, I also told, the rally in the stock is all fake, because no company can give the guidance which has credible guidance, because none of them have a crystal ball, and neither do us. We only see there's a lot of uncertainty, and probably there is more challenges ahead for almost every Indian IT services company.
Deepak, is this an indirect profit warning from Infosys? Let me ask you this question, because if I add my numbers, I get a sense that they will struggle with their FY17 guidance. The FY17 guidance, Deepak, was revenue to grow in the range of 11.5% to 13.5% in constant currency terms, and in dollar terms about 12% to 13.8%. If I simply assume what they've done for the Q1, it will be a struggle for them to stick to their FY17 guidance. Is this a profit warning from them?
Was that for me?
That's right, Deepak.
Yeah, so I think, we've seen about 11% constant currency by my calculations roughly. They've got 16% revenue growth. The dollar has appreciated 5.4% against the rupee, considering averages for the 2 quarters. So I believe they've done about 11%, in revenue. Their profit growth is poorer. So I believe from an earnings growth perspective, they'll probably do in rupee terms about 13% they've done in this quarter. And I see some negative surprises. Honestly speaking, I'm looking at the revenues right now. Almost everywhere the revenues are doing reasonably well. Their results on a profit basis is lower than we expected. So while their revenues have kept pace, I think their profits have disappointed in this quarter, yes.
What we wanted for FY17 guidance, and there is a markdown there. There is a markdown there because what the earlier constant currency guidance was, hear me out, 11.5 to 13.5. The new guidance is a notch lower, not a notch lower, but actually more than a notch lower. Yeah. So this is more like a profit warning, guys. Infosys has cut their guidance. This is the big headline which we've got from Infosys this Friday morning. After sounding rosy, confident, I think they've come out and they've surprised and they've really shocked a lot of market participants.
At the top end, at the top end, they are saying 12% from an earlier 13.5%. So that's a 150 bips cut in guidance on the top end, which is really the big thing. and that should worry people. Constant currency terms, 150 bips guidance cut at the top end. This is not good
See,
news.
the communication is not very consistent, Neeraj Aisha. That is what troubles me. Q4, you paint a rosy picture. Middle of the quarter, you say something else. End of the quarter, you say something else. The world has not changed so much in last 6 months. I mean, otherwise, TCS yesterday would have blown the whistles.
Right.
And they would have blown the red flag. So what's going on? Why are you changing so much in between quarters?
Yeah, Urmil Shah, quite a disappointment, the cut in guidance in constant currency terms, and it's not by a small margin, right? 150 basis points in just from the previous quarter to now is sizable.
Yeah, so clearly the guidance cut is a disappointment, and we also need to keep in mind that the impact of Brexit is yet not clear. It would pan out according to us from Q3 onwards. So keeping that in mind, yes, the guidance cut is a disappointment for us.
Chaudhary still with us. Trip, this 150 bips guidance cut at the top end in constant currency terms. How, and we'll just go to Sarabjit as well. But Trip, how big a disappointment to you is it? No, I think
you know, I need to go across to the management quote, and here's the word coming in from Vishal Sikka. He's saying we had unanticipated headwinds in discretionary spending, in consulting services and package implementations, as well as slower project ramp-ups in large deals that we had won in quarters, resulting in a lower than expected growth in the first quarter. That's the word coming in from Dr. Vishal Sikka. He's saying, despite this, I am very encouraged by our progress in the execution of our strategy. We launched Infosys MANA, our artificial intelligence based approach to help clients continuously renovate their business processes, and have already delivered on first client successes. We continue to see strong momentum in large deal wins, in which we are bringing the best of our renewed new energy strategy to every deal, and we continue to see strong growth in our delivery services due to their renewal on the basis of zero distance, design thinking and automation. Going forward, he says, we will continue our strong focus on our long-term goals and vision of transforming Infosys, where open, intelligent technology amplifies people and frees them to innovate in a culture of learning and collaboration while bringing operational excellence, cost discipline, etc. But I think the key is what he said in the beginning. What went wrong this quarter?
So maybe the understanding of the cycle went wrong. Maybe there are some genuine ramp downs which have happened, or ramp ups have not happened which they thought. But my limited point here is that there is a stark difference in their communication between Q4 and Q1. So I'm looking at Infosys here. If I compare that with TCS, and let's look at the TCS intraday graph here, we'll come to that intraday graph. There is a very big difference. What did we hear from Chandra? I'm excited, I am confident, there is agility in my business. There are some blind spots like Brexit and LATAM. That's about it, but business is looking good. Here's the management coming out and saying that, look, we lost business. We had unexpected headwinds. So Infosys has been in performing stock. They had raised the bar higher with this kind of a commitment. Markets bought that commentary with the assumption that this is coming from Infosys, which had a strong track record. So A, the baggage of commitment, B, the baggage of outperformance, and then serious under delivery.
Look at the stock.
You know, but you know what this?
I mean, come on, I'm not surprised what's going on.
9.5%.
You know what this does is, and I'll go to Sarabjit on this. What this does is it puts the other IT results now firmly in focus, because the top two have come out with contrasting commentary. So therefore, we don't know whether this is a company-specific issue or whether TCS is an outlier and the other companies will also face this. Sarabjit Kaur Nangra, Infosys is down 9%. It is also pulling down TCS, which is now down 2.5%. Your thoughts, what would your reaction be on Infosys now? What are the revised price targets with the guidance cut?
See, actually, in terms of rupee, our numbers are more or less in sync with rupee guidance. So as of now, I need to go into detail as to the cut and guidance cut, but prima facie, I don't see a need to change my numbers on Infosys drastically as of now. So as of now, we are not changing our outlook and numbers. Yeah, we are disappointed by that outlook in terms of body language that has changed earlier. Mr. Sikka was pretty confident that numbers would be met, whatever come may. But I guess this concern areas are growing larger, the way he has indicated earlier. probably that's playing out in terms of lowering of the guidance. But in terms of rupee dollar, I guess, since we evaluate the numbers on rupee dollar, I guess those numbers, we are already very conservative. So we are not changing our numbers, at least for the time being.
Yeah, you know, in markets, absolute performance matters, but when you have when markets today are comparing TCS and Infosys, and I'm sure our experts would also like to hear this one out, the revenue growth, what in dollar terms, okay, the revenue growth what TCS reported yesterday was 3.7%, Infosys is 2.2%. The margin contraction by TCS was only 100 bips. For Infosys it is 140 bips, and if I look at the net profit growth, Infosys has reported a 4.4% drop. So my limited point here is that it is a guidance cut by Infosys. Did they commit to, did they overcommit, and are they under delivering? Now, what will also raise concerns by some doubters is that this is the first time the messaging has gone wrong by the new management. Market had derived a lot of comfort from the old management. The original motto of Infosys has been that always undercommit and then over-deliver. Has the new management failed in this kind of a traditional communication which Infosys has really communicated? And I guess Deepak Shenoy, that's a broader question. It's not about this quarter, this miss or this miss. It's all about understanding of the new management, how adaptable they are and how open they are about assessing the environment.
I agree. There's a lot of things that have changed. As you can see, the results are out. Were supposed to be out at 9:15. They're now routinely delayed 30-45 minutes. We have seen changes in assessment of how their guidance should be looked at. Typically, they would beat guidance. This is not really the case. So they've had some unprecedented issues, of course, with things in the quarter like Brexit kind of turning out pretty bad towards the end. But I believe you're right. The communication needs to be streamlined a little more. I was not very positive on IT companies, but among them, Infy was looking to be the brightest. I think I still aren't very positive about IT going forward, but Infy does not hold that leadership position at this point anymore. It probably goes towards TCS more after looking at both the results.
Sure does. Quite a bit of disappointment, and just look at the way the stock is actually moving. After a 9.25% blip down, that's almost 100 points gone on Infy. And
it's contributing, Aisha, to about 75 points on the Nifty downfall. So TCS and Infosys cumulatively, and TCS bogged down by Infosys, both of them cumulatively are contributing to 90 points.
Now my problem is that Q4 earnings season, when it started, we got a surprise from Infosys, we got a okay number from TCS. These are two companies which gave us a very good start to Q4 earnings season. In Q1 earnings season, we are not off to a great start, let me put it this way. And when the weak companies, when they will come out with numbers, and if those numbers are not strong, then we are looking at a serious markdown. So we are not off to a good earnings season start, let me put it this way.
And the market is somewhat like Infy. In the run-up to the event, we have just gone in so strong, and which is why you're seeing such a stark disappointment in Infy, right? Because everyone on the street had just pegged such high hopes in Vishal Sikka that he's the man who's going to be at the end, deliver it all for Infy. Infy was top of the pecking order for every and any analyst, and which is why such a stark disappointment as well. But Pankaj Sharma, what do you do with the stock now? Just stay out and await the management commentary, get back in when the first signs of a revival perhaps for Infy come in? How would you approach the stock?
See, I think even before than that, I think there are two very large issues apart from the numbers. One is that how can the management be so inconsistent in last 6-12 months? Like, there are times when they have given an outlook which is very good, and in between they come and say that things are not great. So I think it has to be a consistent commentary. And the second point is that in the first quarter you are revising your guidance by 150 basis points, and if it happens in third quarter, it happens in second quarter, it's still okay, but in the first quarter if you do that, it looks really very, very bad. So on a comparable basis, like, we were wrong, of course, and we were of the view that Infosys is better than TCS, but now I think we have to reassess the situation. I would not really think that we should take a chance at this point. We need to first understand what the management tells us about what went wrong, and if we find that consistency in message in other results and what IT companies in general would report. So it is possible that IT industry is struggling and TCS was a bit like an exception where they reported okay kind of numbers, everybody else is going to report bad numbers, and then Infosys might not look that bad. So I would probably wait for first look at what management says and then corroborate that with what everybody else comes out with, and if that is consistent, it's okay, but not at this point at all, not at this point.
Urmil Shah is with us as well, and Urmil, apologies and thanks so much for waiting by patiently, but my question to you is simple. What should somebody who's listening into you right now and has seen Infosys stock down 8% currently do with that stock now?
So I think at this level we do not see a significant downside from here, but we need to understand as to are there any more risk for further uncertainty, especially in the second half, because if that is the case, then according to us the stock might not move up as well. So while we think that from here the downside is not significant, but whether the stock will move up or dramatically from here, we need to be assured that there are no further risk to the outlook which they have provided, which we think will be difficult for the company to confirm, because second half is likely to see the impact of Brexit, and which right now is just in the evolving phase.
Well, poor on every counts. That's how you would sum up Infy's numbers. You could completely negate that PAT performance, which is coming in line. There's been a guidance cut, a severe one at that, 150 basis points from what they had earlier set out. They're surely not going to match up with their FY17 guidance that they'd set out. They're going to perhaps perform lower than the industry average as well. That, of course, is the highlight, the geographical breakup really coming in of Infy's performance. The dollar revenue, rupee revenue, they have all disappointed. Sandeep Agarwal, what does the shareholder in Infy's case do now after this huge gash down, and more importantly the management commentary as well? That's talked about the problem first. Vishal Sikka tried to sugarcoat saying rest everything looks okay, and Infy is still very, very encouraging. We have a great team at our hands. How would you read into the management commentary, the first bit of it?
So I think it is too early to react on management commentary, but yes, there is a miss on revenue, which is a sharp miss, and it puts a lot of pressure on them for quarter two to do the guidance which they are guiding. In my view, revenue disappointment is very, very sharp, although PAT has been maintained in line with expectation, which means that significant levers have played out. I don't have access to full numbers by the time I came for the interview, but broadly I believe that we have to consider two things. One, the little bit of numbers which I have seen, India has disappointed very significantly, 8% plus constant currency decline, and Europe has not at all grown. So broadly these are two things which I can see on the limited set of numbers available. I would like to wait to listen to the management what has happened, because if ramp up of large deal is the issue, then I probably believe it is temporary. We have to see numbers more in detail and also have to hear the management commentary, but this will result into obviously 1% revenue cut, and we also have to reassess what kind of EPS cut can come. At this point, with the limited data available, I think revenue disappointment is quite sharp.
Yeah, it is, and it's showing in the Nifty IT as well. Urmil Shah, before we let you go, what would your... Okay, Urmil is gone, but Deepak Shenoy, not letting you go, I just want to ask you, what's the pecking order now? There is a marked downtick in Infy with reason between Infy, TCS and the others. Is there an obvious choice out there for you as an investor?
Actually, no, I don't hold any IT stocks, so I wouldn't choose any of them. But if you at this point, I guess TCS seems to be a better player, but we've got to wait. There's HCL Tech coming, there's Wipro. Wipro has been an underperformer for years. You don't know, it might actually throw something more interesting into the ring. We've got the smaller players and the others like Tech Mahindra, and Tech Mahindra is going to get hit most by Brexit, and we'll see how that pans out. So in comparison, I think I'll still have to wait to see if there's anything moving out there. But at this point in the next year, I don't see IT outperforming the overall market. I may be wrong, but I don't see that happening at least in the next 365 days.
Sandeep, the damage has been done. The stock is down 10%. So no point in analyzing numbers. It's time to look forward. Is today's panic a good time to buy? Or Sandeep, do you think the buying price could be much lower? It could be closer to 1,000 rather than closer to 1,050.
So that will depend on what is the commentary, because see, unless you come to know what has happened exactly, and those details will be available only on the call, it will be hard to take that call. I don't see 1080 as a very expensive level. In my view, these are decent levels, unless there are more pain in the commentary or more pain in dissection of the numbers. In that case, probably yes, there could be some downside, but otherwise at 1080 it is more or less like 14 times. So that is not a very expensive level, but we definitely need to listen in detail what management is saying and what are the right reasons for the miss other than India decline.
Okay, Pankaj Sharma, you called it right at the start when the stock was down 4% that it could likely head lower to the tune of 8 or 9%. Now what? I mean, it's already shown a bit of a reaction. What about the rest of the day? Do you anticipate the weakness to stay? And consequently, do you expect some buying to come into some of the others at the expense of Infosys, or not quite?
Right. I think I would probably wait for and expect management to be a bit cautious in the commentary, because I think the damage has been done by not, of course, in absolute numbers, but absolute numbers versus what the market was expecting. And if the management understand that this is something which is very, very damaging to a stock, and if they correct that, and if they come with an explanation which is reasonable, and also set the tone for the rest of the year that we will have pressure, we will have issues, and we'll try to, of course, mitigate that risk. But if they remain bullish, I think that would be a worrying sign. And if they say that, okay, fine, we are facing challenges, we have problems, but we'll try to sort them out. So if they take that approach where they are consistent and they say that, okay, fine, things are not that great, but we were expecting better things. So I think that is an approach I probably expect management to take, that things are really not great and there is a reason why this has happened. But if they remain bullish and if they take a very aggressive stance on this, I think it could be more damaging for the stock, and that is something I would be worried about the most.
You think after the commentary that they have set out right now, talking about the problems that went by in the quarter, and after a 150 basis points cut, they could really sound confident or aggressive about the future? Pankaj, the question is for you.
Yes, I think that depends, because when you say that it is a problem which is a very quarter specific problem, and then you say that, okay, I expect the same kind of good things and same outlook which is very rosy for rest of the year, that's a very, very different thing compared to what you say that, okay, this quarter definitely had more issues than what we are expecting, but this also reflects that the same things could happen the rest of the year as well. So these are very, very different things altogether. When you say that, okay, this quarter only had a problem and then the rest of the year would be very, very good, versus saying that this quarter had some of the unexpected issues which they have actually said, and then say that this might actually get reflected in the rest of the year also. We might have issues which might be unexpected. So this 150 basis point cut could actually get worse, because 12% growth is still very, very good. If they reach that number, I think market would be happy. But I really think that after what has happened in the first quarter, if they continue to remain very, very aggressive about that estimate, people would not like it very much.
So Pankaj, it ultimately comes down to that price point at 18 times or sub 18 times now. What is the margin of safety for Infosys stock? Forget the commentary. I mean, ultimately it's all about buying the price.
So I think if you see that only purely on the basis of first quarter result, I think that the stock has already factored that in. So if I expect that even you have an expectation which is 8 to 10% less and lower in what they would deliver in FY17, I think that part is already factored in. So I would not really mind buying Infosys at this price. But again, as I said, it is dependent on what happens on the guidance and what happens on the commentary for rest of the year. But purely from first quarter results perspective and the numbers which has come in, I think the stock has already factored that in, and it's a decent price. Nothing to get worried about too much.
Okay, Deepak, again, I think we spoke about the pecking order and, you know, waiting for the management commentary. I'm just saying, and they've shown about a 12% guidance at the upper end. the commentary won't have too many bullish statements. So suffice to say that he will at best sound cautiously hopeful. Deepak?
Is that me? Oh yeah, sorry, I didn't hear my name. Yeah, I think no, I've been looking at some of those things. If you look at what's happening with Brexit, a significant chunk of income for Infosys comes from banking and financial services, and the biggest hubs here is London. So if a lot of financial services firms are going slow and not progressing their discretionary spends, that's obvious because at Brexit, things will change a lot. They will have to do capex, they'll have to move things out, they will have to do some things. It may result in some incremental revenue, but some of the discretionary spends will definitely come down. So I believe that revenue is definitely under threat. That's, I think, more than 20% of their total revenue. So we'll have to see how they get compensated by that. I believe the next quarter is not going to be good just because of Brexit by itself. It'll depend on how they change their revenue mix in the later part of the year. That will probably make a difference. We'll look at management commentary for that. But Infosys is definitely, this is going to be across the IT sector, but Infosys definitely has some rework to do.
Indeed, get back to the drawing board and rework a strategy perhaps. By the way, Infy is seeing the biggest percentage fall intraday since 12th April 2013. That day, the earnings also were a miss, and then too, guidance was cut. So history has repeated itself, and in a very short time span, might I add, just about 3 years. So 2013, 12th of April was the same story for Infy, wherein they came about with the margin where the earnings were a miss and the guidance was cut, and today too it seems like the same picture. But just yesterday, Deepak, TCS management was speaking with us, and Chandra said that Brexit is a very evolving situation. He's monitoring the Brexit scenario, he says, but UK still doesn't know what the terms of the Brexit are going to be, and what trade negotiations they're going to have with the EU, etc. It's going to take some time for this entire Brexit scenario to play out. So clearly it seems like the Brexit scenario is going to be a haze and a question mark for the next few quarters to come.
Actually, Aisha, the problem really is about what you do. If you're a financial institution that has a significant base in London and you're subcontracting out to Infy, you're now starting to worry about how Brexit will affect you in the future. So you're going to start to diversify. You're going to set up offices in Berlin or in Belgium, where European visas are not that easy to get for a company like Infy compared to the UK. So there's going to be a little bit of consternation over there about how the mix is going to change. There's going to be a drop in discretionary spend precisely because they don't know how much they're going to have to spend on relocation, on changing stuff, on what happens really. The uncertainty until Brexit actually happens and they have a clear path ahead is good.
We started Q1 on the backs of a very strong Q4 as we ended the financial year with one of the best Q4s in